Okie dokie. Let's try to get some peeps in here. Let's see if you guys want to come. Let's see. Ah. Oh, we got a viewer. Beautiful. What is going on? Say hi if you're here. We're just trying to get some people in here. All right. Let me know if you're here. Let me know if you're here. All right. We got a view. Average view duration 1 minute. Beautiful. All right. What is this? Gap time. Yo, yo, yo. We got people. Concurrent viewer. Beautiful. Alright. I'm just gonna get started if I do have a viewer. I don't want you to get bored or anything like that. Alright. So look. I watch a lot of people, and a lot of people say a lot of things, and you know, everyone's gonna be right until they're not. But what I learned is that the trend can change at any given time, and the market makers can change the trend for any reason, right? But the real reason for the market maker to change the trend is the dollar's out of whack and he's got to get him back. That's really the only reason. And really, what he's doing is just testing levels and seeing what, you know, do people want to buy or do they not want to buy, right? Down here, at 16K, no one wanted to buy a 16K Bitcoin. So, what did he do? By the way, the gray region is when he's on duty, all right? So, you know, what did he do? He fires it out the gate in the new year, wants to test these levels up here, you know, to see if, you know, if the value is up, maybe they want to buy, right? Okay? Now, not only that, what it does is it grabs the stops of the higher level, you know, better traders who are short from up here, all right? Because think about it. If you were, you know, like Mr. Savvy and, you know, you saw the top and you saw this huge downtrend and then you see this flag, right? Very simple pattern, you know, bear flag. You're going to want to short the top of the flag once it comes up, you know, to the top. I mean, they didn't give you that many touches, but 1, 2... on the third touch, if you were bearish, you shorted this, right? Fair enough. You shorted the top up here. You rode this all the way down. And then you put your stops, you know, in the consolidation zones. All right? That is, in essence, you know, what a good trader does. He rides the wave and then he moves his stops up so he doesn't get stopped out. All right? So, there's a couple of things in here, right? It'll just be going down, and then you'll see Bitcoin just shoot up out of nowhere, right? I remember this day. Well, it was a holiday, May 31st. Just shot up out of nowhere, and everyone got crazy. To me, what that is the good shorts put their stops in the consolidation zones just above previous highs so they wouldn't get stopped out, and he went up there and grabbed the stops. All right? Down here, right? He creates a consolidation zone for anyone who got it right to put their stops in the consolidation zone, right? And then they manipulated the market because they needed supply. They're not buying here. They always buy at the lower level. So just below where everyone else bought. Everyone wanted to buy this, buy this, buy this, buy this. Just kidding. I don't buy there. I'm going to manipulate the market, bang, and I'm going to buy here. I'll buy 15K. And not only that, I'm going to liquidate anybody who went long here. That's what he did. He liquidated anyone who went long there. Great. So now the longs are out of the market. Why? Because I need to collect to catch the stops of anybody who moved their stops down into here. Right? They move their stops from up here. And you can see that. That is why the RSI does what it does. All right? Look at it on a weekly. All right? So, it's telling you whose stops he's grabbing. All right? He's grabbed these stops and he's grabbed these stops. So, for anyone that shorted up here, and like, look, you can look. Here's your peaks. Right? Here's your little peaks. This is where the good shorts got in. All right? So this one doesn't count. All right? But this one, all right? No one shorted the top. Even Savvy didn't catch the top. right? They made an irregular correction. I remember watching him, and he drew this line. I love Savvy. Don't get me wrong. I'm a Savvy fan. I don't care, right? He drew this, and he said, all right, if it comes past my line, then maybe we're going to go to all-time highs. That was his trend line, okay? This pattern that they made was made for a reason, okay? So that they could grab the stops of anybody who went short here, 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 and here. That's where Savvy's stops was. So basically, Savvy got stopped out, which is cool, man. Good for, whatever, right? Oh, what up? Yeah, people. Sniper's Nightmare. Posted a link in the main Discord channel, hopefully. Cool, thank you. All right, so that's where your stops are. All right, cool. But RSI will tell you the strength relative to the price. The price is high, but the strength is low. All right, nice. 22,879. Good for you, bro. Keep shorting, because to me, I'll show you why I think we are in a very extended bear market. I'm gonna go through that. All right. So you got your relative strength to the price. All right. RSI is getting lower. Prices were getting higher. It's terrible. So now you got this line right here. Here you go. Anyone that shorted this bear flag once we came down to the lows, because everyone wants to get in on the bear market, money for all the shorts. Head and Shoulders. Word. You could. I've been watching Tino, right? Head and Shoulders, M formation. All the same thing, right? All the same thing. Nonetheless, it's just Head and Shoulders, just another manipulative pattern to grab the stops. We'll go over. Bro. All right, so check it out. So you got RSI up here, right? Anyone that shorted this put their stops in here. So what does the RSI say to us? All right, the RSI is telling me, oof. Come on, bro. All right, look at the fish hook. I've grabbed the stops from the higher level shorts. He grabbed major stops. All right, the 5 and the 13, right, on this indicator, right, when they cross, most of the time, I think these trading bots, they fire off, right? They fire off like shorts automatically for their trading bot, right? And that's cool. So what does he have to do? He's got to kind of come back for those algorithms. All right. So right here, he's grabbed the stops. Cool. Right? He's got them all stopped out. So this is a stop hunt. That's what this is. This is a stop hunt. All right? He stopped out the higher level shorts, the lower level longs. All right? He's stopped everybody out. Everyone is done. Good for him. I used to get mad about market makers moving the market and stuff like that, but really, it's a good thing. So now, how can you see this coming? All right? So I know Tino draws this psychological pattern out all the time. All right? And now I'm not going to, make people think I'm crazy or anything like that, or what Bitcoin is or why it was created or whatever. But let's just say it's a speculative asset, okay? I know Savvy has done this too, but he does it with Elliott Wave or whatever. But the fact of the matter is, whether it's the psychological pattern, 17K, is that what we want? Maybe. I think so. All right, for sure. It depends on the demand. The price is only based on what someone's gonna pay for it. If there's no demand at 17, they'll move it down. What you see when price goes down is long liquidations, and then it'll come right back up just to get the money. They go down there to grab the money and bring it back up to the level that they're testing for retail. That's all it is. All right. So here, let's see what we got here. Here's your M formation. All right. Right at the top. All right, but look at the waves. All right, they come in levels. All right, so here's level 1. Now I don't know if this should count. Here's where the levels get really tricky. All right, this would be, yeah, this whole thing is level 1. 3 pumps comes out the gate. 1, 2, 3. Right, level 1. This is level 1 consolidation. It consolidates, or we'll just say retrace, into the 200 EMA on the weekly. All right. And then we get level 2. Right? Where level 2 has a lot of manipulation going on. Right? Manipulation, stop hunt, rise. So don't even get it twisted. Was the flu just a stop hunt for regular markets? I got my own theories on that. And then you got M formation. All right. Now you got to decide where you're at in the big picture, right? You don't know where you're at. You just want a clear break of zones. Right now, you've not broken the previous, level 2. All right. They are going to test level 2 and see where the buyers are, and then they'll test level 1, right? So they will test as low as, they'll test the previous consolidation zone at $8,000 that they created in the bear market. They will test if no one bites there, right? They will test the stop hunt previous consolidation zone at 4,000. If no one buys there, okay, they will test the lower levels, and you'll just see price drifting down there. All right, to about $1,500. The levels just need to be tested. Okay, that's all it is. They're just testing levels, right? So I asked my co-teacher, right? She was like 50 years old. I said, "How much would you buy Bitcoin for?" She was like, $150. Why would she say that? Because she saw Bitcoin at $150, probably right around here, right? That's what she saw. Yo, sub 5K, 100%. Here's why. Because I asked her, she said $150. Then I asked a guy my own age, who, we're teachers, all right? He makes a teacher salary. He's like, I'd buy it at $1,500. This is your normal guy, all right? Now, they're not really going after that kind of money, really. They don't need to. That's not where the money is, because the bigger money, if it is valuable, big money will buy where they find the value. Right now, no one is finding value in this at the moment. That's what it is, whatever reasons, all right? Now, my vice principal, he's got some money, right? He said 3K. All right. This is retail. Retail. The business works on, to me, 2 levels. It works with retail money and big money. So the first level is finding big money. Where is the big money want to buy? Okay? Not retail money. So you can find that with volume, really. All right? That's really where you can find that. And if volume came in or not. All right? Down in here, it was just declining volume. All right? That's all there was. There was no volume down here. In this consolidation zone, volume was just dropping. Right? You see how it's dropping? And this is 3 weeks. So for 3 weeks, they said, let me test this. No one bought. Well, some people bought, That was a good level right there. This week. Great level to come back into to test. 16.5. Perfect. There was some demand down there initially. All right? There was some demand here, right? But when it started dropping again, of course, because prices are going down, it falls off. All right? So that's all this is. This is a test. That is your W pattern in essence. All right? W formation. Rise. Now, here's the thing. I just told you that retail is not going to buy anything. Like, my vice principal is not going to buy Bitcoin unless it's $3,000. So if they send it to $7,000, all right, and then it goes higher, how are you going to get retail to buy? Well, you'll send price, you'll press the button, the buy button, right? The pump, you'll put the pump button, if you will. The halving, okay? The halving button, the narrative button. You'll press that button, send prices up, and then you can get retail to buy. So really, what's the goal? Is it the goal to get big money to buy or retail to buy. The goal is to get big money to buy. Where is big money going to buy Bitcoin? Probably about 7K. All right. They'll buy this consolidation region, right? That's what they'll buy. But you also need to show that this thing has value and is growing over time. Now, if they want to break it, right, so they can buy more of it. Now that is my stupid theory, all right? I'm gonna go sip a Mountain Dew. Now, someone in a chat once told me that when retail misses the boat, it sails. But when big money misses the boat, they bring it back to the dock. Cool. If they want to bring it back to the dock, you got to figure out where their biggest buys were, right? Because they're not going to buy again up there, right? Because they can make more money buying low and then selling to us higher, all right? So here's level 2, all right? They can send it to 7K and 3K, but if they want to bring the boat back to the dock, you just got to look here at where their biggest buys were. And the market makers don't use Fibonacci like we do. The market makers use Fibonacci to gauge how much money they can make. All right? A market maker is going to make buys down here and go, I can make about 1.5 times my money, 2.6 times my money, 3.8 times my money. That's how they use Fibonacci. They use it to figure out how much money they can make when they send it there. Because once they send it to the 0.618, that's a demand zone. All right? That's why retail we draw those fibs out. So how did I do this? All right? Here's stopping volume. How did I do this right there? Okay, look. How do you figure out their buys? Here's their buys, right? That's a down candle, right? I make it green because that's what they're doing. They're buying this candle, all right? They bought this candle here, big, right? Big buy. And we had a big buy here and a big buy here. 3 buys. They made 3 buys in this level. Now, don't forget, when they're also buying and selling at the same time, right? So you just got to go back to their big buys. Here are some really big buys back here, right? Back in here. But are they going to send Bitcoin down to $500, where they bought from last, right? Because you still have to show value on whatever it is that you are buying and selling. And then you need to create narratives for that thing to sell. That's all it is. All right? So, based on this stopping volume, where they stopped it last, right? You got stopping volume here and stopping volume here. All right? This is where they slowed price down. All right? This is where it was slowed down for whatever reason, to control the derivatives market and to slow the price down so it doesn't get out of hand. All right? It's just where they're slowing things down from. All right? Stopping volume. Because don't forget, if Bitcoin, I don't even know, if it existed in the derivatives market, right? And you're a retail trader and you're long on some derivatives exchange, here's where they want to stop you out. Here's your 100x, 25x, 10x, and your retail stops. All right? And don't forget, if you rode this rut up, right, you would place your stops in the consolidation zones, right? You place your stops, you see it drop, right? It never hits your stop, right? You place it in the consolidation zones, and then what you taught, place your stop just below your previous low. Previous low, ride up, stop, hunt, continuation. That's all it is. That's all that's going on here. They're just moving price to stop people out, liquidate whoever's got it right, or whoever's degenerate, and then they move price to where it can go, where they can sell off their spot bags or whatever. That's all it is. All right? What we want to know is where the next demand zone is. To me, the most logical demand zone, right, if they want to bring it back, is right here. $2,400 or $2,462. You could get a ton because like my vice principal wants to buy it at 3K, right? If my vice principal wants to buy it at 3K, that's probably where big money wants to buy it to, if they want to bring it back to the dock. All right? They're not going to, or they could send it right back in here. All right? And notice the volume. This right here, they created a huge gap in the chart, right? Where they can kind of dip price down into. The blue volume is a second gap. This is excellent. Oh, thank you, man. All right. So, that's why in these levels, all right, which are very, very, very difficult, you usually get 2 levels, but you don't always get 3. So will you get 3 levels of drop? This is, but the thing is, like, everyone doesn't realize that this is just level 2 from the actual cycle. Now, you want to hear something really effing crazy? Bitcoin loves the Fibonacci. It loves the Fibonacci. All right? Think about when Bitcoin pumps. All right? Check this out. Bitcoin pumped on January 13th. All right? Those are Fibonacci numbers. Okay? Why do you think the 5, the 13, they say the 50, but Mr. Savvy, he's the man, he uses the 55. Why do those exponential moving averages work? Right? They say to use the 200, right? That's where they want to get. But if you use a different moving average, that's a Fibonacci number. God help me if I remember which number that is for that one. 233. Don't use the 200. Use the 233. Right? Tino says to use the 800 EMA, right? But they're not using the 800 EMA. They're using like the 900 and something. They use Fibonacci numbers. All right? So here's the thing. Time will always be more valuable than money. That is a fact. Because you can always create more money. You can always create more demand through false narratives. You can always create you can create these things. One thing people cannot create more of is time, right? Unless they speed it up and slow it down. That's the only way to create and manipulate. You can manipulate time by speeding it up and slowing it down because time is relative, right? To the way that we want it to be. When you're having fun, things go really fast. When things are, right, time is money, right? Time is money. You're right. So that's why they manipulate the time in which they move the price, right, to create more money. So that's why Tino's indicator works, because it measures tick volume, right? It's the volume that's transacted within that time, right? So they are just manipulating price. It's just a manipulation indicator. So they tested the zone, right, down here. Let's go to the 4, 8 hour, whatever. All right. This is them slowing it down. All right. Slow it down, speed it up, right? That's how it works, right? Funny enough, well, when did they pump price? On January 13th. This is the 11th. But the price came on, what's the pump, right? The last one. There you go, Friday the 13th. The third hit came on a Fibonacci number. When was the next level? The 20th. That doesn't really go with my theory. Look, I got the Fibonacci theory. All right. Really love Fibonacci. All right. But look, if you wanted to see this move coming, here's one way that you can kind of gauge that. All right. And if you haven't watched this guy, and I almost feel like not promoting him in case anyone weird is watching, you got to go back and you got to watch this guy right here. Beat the Market Maker by Steve Morrow. He is the absolute man. He is the man. Because you can trade retail trends, market maker trends, because market makers create the retail trend, right? So they can trade against it, but they need to give you, they need to provide the technical analysis. They need to provide that to you so that it validates it. That's why technical analysis works 60% out of the time. I don't want to be in the 60% business. That's not how you make money. I want to be in the 8 out of 10 business. If I wanted to gamble, I would go to the casino. All right? I don't want a system, but based on, no offense to Sheldon the Sniper, I know he's a good guy, but he chose retail trends, right? You got a 60% shot. That's not how you make money consistently. I don't want that system, right? But the market maker system, which is extremely freaking difficult to figure out what the hell these guys are doing and when they're doing it and why they're doing it, right? It's extremely difficult, is an 8 out of 10 system, all right? And this guy will show you how to do that. Now, don't forget, now the market makers know we know their system, but not enough of us know, right, what's actually going on, all right? So, look, here's what retail drew. Retail drew this the other day. They drew this trend line, and they all got paid. Great. Now, whether they're paying themselves or they're not, okay, there are stops in this zone. So price will come back to there. Price will come back to this region right here. Because anybody that got it right, they got to stop out anybody that got it right. Okay? That's it. They will stop. They will bring this back up. But it will take time. Now, I was talking about time and how time is more valuable than money. All right? My indicator. Here's what you got to look at. And here's what I think the best thing that you can take from Savvy. Now, you got to be careful about what chart you're using too. All right? TradingView came out with this chart of all of the data of Bitcoin, which is great for EMAs. All right? Now, Binance's chart is different. All right? So let's just go to a 1 month. All right? And let's go to the weekly. Because people trade off these crosses. All right? They have bots that are going to trade the crosses. So the blue is the 50 EMA, which we call the watermark, right? The 200 is the Mayo, all right? So in case you want to know, 5 is the ketchup, yellow is the mustard. The gray are the secret market maker exponential moving averages that they might want to target at certain times that people don't want to realize, all right? So look, when the watermark crosses under the Mayo, everyone knows that's a death cross. Why has the watermark, the 50 EMA, not crossed underneath the Mayo, all right, at this time on Binance? However, on all of the data for Bitcoin, you got that cross. Why does it do that? Because derivatives are traded on Binance, all right? My EDF thoughts, BTC 21, 20, what do you think? I think, I don't know. Let's take a look. You know what? We will never know because it's all about where, if people pay themselves, because don't forget, here's another thing. I looked at this, right? He stopped out the shorts. He went for that. But he didn't go for, so they're longs. He didn't go for the shorts. Why? Oh no. Yes, sir. Mayo and ketchup. He didn't go for the short liquidations because he's short. Because he's trading too. He wants to make money. That's the crypto market's great for that. They're short right now, and they're short from 23,700. Now they will probably pay themselves. See, the price went down. Let's see if they paid themselves. The price went down. There was like almost 7 billion up there, right? I bet you it's kind of gone, but it's gotten lighter. It's probably half that now. Let's see what it is. Look, there was like 7 billion up there. Now there's only 1 billion. So $6 billion in shorts is just gone. So they liquidated 5, right, by sending it down. And now, and it cost money to do that. So they used their shorts to come down and liquidate the longs and paid themselves. And they made $1 billion. The market maker's short equity needs to offset his long equity. And he also needs to book a profit in that process. All right? That's how it works. Right? He's not getting $7 billion. It's not like that. But he will make $1 billion off the move for his next move. All right? So where can price go next? I mean, that's what everyone wants to know, right? Here's what I know. You're never gonna know. Because you don't know who's paying themselves, who's not. All right? What I do check the high block. Right now, he is entitled to send price back up here around 22,600. He needs to scare all those short liquidations out. He needs them out for him to move price where it needs to go. When he does that, he's going to create another pool of long liquidations. So right now, the market maker is going long. Maybe. Because he could always send price down again and go long from lower prices. However, he's got $1 billion sitting up here, and the lower he sends price, the more money he loses. Because he did lend out money yesterday. All right? So it's likely. That's why you see price drift sideways. All right? So let's go to a 15-minute. See how it doesn't go anywhere? This is the bottom. Here's your bottom. Here's your range after the second half of the week. He can't send price lower because then he lets the people who got it right out. All right? Now, you're a retail trader. All right? And here's the week. Here's this week on the 15-minute time frame. All right? Now, I want you to notice something else, too. The money is in the wicks. All right? Think about the chart. This is how I started thinking about the chart. The chart is like a channel, right? Where they're buying and selling at the same time. So I kind of changed my wicks. See? He buys at the lowest point, and he'll sell to you at the higher point. See that? This is his buy and his sell, but he never loses too much money, right? How much money was he willing to lose on these two wicks? All right? You can measure it. 0.7%, right? Whatever. All right, but that's the idea. Buy a lot, sell a lot, but not all of it, because you got to keep some for the bank. All right? All right? The money is in the wicks. Wick to wick. All right? Now, Tino will use the 800 EMA, but that green line is, I always forget the freaking number. It's the 900 something. 987 EMA. All right? It's a Fibonacci number, right? They want to get their shorts filled at the highest point. So they're always going to get their shorts filled above the 800 and on these time frames, all right? Depending on what time frame they're using, all right? That day or for their plan. You don't know what time frame they're on. They're on all of them. All right? But look, here's the deal. Where's price going to go? Because that's what everyone comes in and wants, right? They won't want to know where price is going to go. I can tell you right now that we have no idea. Okay? Right now, price is what? Moving down in New York? Cool. Maybe people are still buying this. People might be still going long. So what do we got, though? On the 15-minute time frame, you got a green pin. The market maker is buying. But the market maker bought here, here, and here. On this drop, he's now bought 3 times. In New York, he sold here on the 15-minute time frame. This is 15 minutes, really not as good as something larger. Let's go to the 4-hour. See, the 4-hour doesn't show me that flavor from him. All right? He's only bought really 1, 2. It's not a vector, so that's not him buying, right? You want to look at the volume. 1, 2 times on the 4-hour in this drop. All right, but what about the 1 hour? How many times has he bought on the 1 hour? There's 3 buys on the 1 hour time frame. 1, 2, 3. Now he hasn't come down to this gap right here. So let's see if he comes down, he hits my Fibonacci, my Fibonacci EMA, the lowest possible point where he will buy from, right? Shake everybody out, only to reverse price back up. But it's also Friday, so, you don't know. Right now, he's got to scare enough people and then move price to where it needs to go to get people to pay themselves for anyone that got it right. All right. So you want confirmation, in essence, of the move. You got Market Cipher is great for momentum waves, but this is telling me that money is still coming out, right? This is like sentiment almost, right? Sentiment, money, but it is underbought on the 1 hour, right? It is at a pretty fair value, but you wouldn't know that, 4 hour. Look, you're getting pretty fair value. CryptoFace describes these lines as when they are in agreement, that is a good trend. So right now the trend is down on the 4 hour, right? The trend is still down on the 8 hour. You're still overbought, right? It's like sentiment. You're still overbought on your 8 hour, your 12 hour. You're overbought on a lot of higher time frames in people's opinion. And you got to think about that because of the news. Now, what do I think is going to happen? I think that he's got a lot of people long that aren't paying themselves. So let's go to the last month. Because remember, this has been a month process for him of where price could go, of who he's hunting. Is he hunting longs or shorts? There you go, right there. He's trying to scare these people out of their position. $20 billion in long liquidations if he sends price down to 18.5. That makes sense, right? 18.5. Now, here's a fun indicator that my man Eric Crown uses. Accumulation Distribution, BBWP, can give you an idea on the daily of where price will go. They accumulated here in January, right? This is where he accumulated from. He was willing to fire off his accumulation, buys here. Now, you can see that he wants to accumulate at a higher level on a daily. Nice. Bullish. All right. Where does he want to accumulate on a 2-day? The 2-day is showing me that he's seeking lower level accumulation zones. That is scary. I mean, you got to read it with momentum too. I know he reads it with momentum. So on your 2-day, your momentum is curved down, right? So are we going to get a huge drop over the weekend, right? You could probably ride this short down, to be honest with you. You could probably ride it down. It's probably a great short. 2-day, 800 EMA. Because here's the thing. Oh, what is that? Sorry, guys. Here's what we know. We know that there's trading bots that fire off, trades when these EMA crosses. But they trade on Binance and they trade on the other exchanges. So, what is he trying to prevent on these exchanges? If he lets the 200 or the watermark come above the Mayo, 100% self-wealth crypto. If he lets the watermark come above the Mayo, the bots will buy. I mean, that's cool. If the bots buy there, they'll fire off a bunch of longs. But it's likely that he'll just stop price for it to come back down. However, the blue vector candles are where speed happened. That is where it moved so quick that the bid and the ask got messed up and created a lot of gaps in the chart. So if you see price starting to come below level 1 here, below $20,400 on your daily, where his last little buys were, right? On the daily, that thing is going to shoot straight down into where he sold from last at about 18,700. That's it. So you just got to take it level by level. Oh, what up, Nate? All right, you just take it level by level, right? And that's all you can do. So what I also heard from Steve here is that you don't counter trade coming out of level 3. All right? You don't want to go long here. You can wait for a short, right? But if you short from here, there's the risk of him coming back up. Because don't forget, my green here, he has long positions built in here. right? But his short positions, if you notice, are more than the long positions that he has built. All right? So, I mean, his long positions equate to about 5%, right? But all of these short positions that he had to take is 15%. He's got to balance out the books. Thanks, bro. He's got to balance out the books. So, until he can build enough longs here to offset his shorts, price isn't going to stop, right? So, what's 50% of the region? You can take a fib. And here's how he uses the fib. All right? Take the fib. You're having a retracement. You can go both ways because they trade both ways. Take your fib here. All right? Let's go left and right or whatever. And you can take your fib here and find out the money. What's 50%? At this current time, it's 19,820. However, I would say the value is in the red. The red is the value zone, 18,184, according to the last positions that he has open here. Look at this guy down here. Danger. Right? Where are you from? But you're from another cycle. I wouldn't worry about that guy. He's got that down there to come back to. He's got shorts built down there. There's money down there. People haven't paid themselves. Or not that they haven't paid themselves. It's that he can come back to that and realize a return on whatever he has down there. Right? Now, the weird part is that he has longs open from up here. But he took some of that. Right? And I don't think he's coming back there. Because that would let all these longs out of their position. Let them out of their longs. If they actually were smart and paid themselves. Right? So, I mean, really, that's your value levels. That's where I get my fibs from. Green is like fair. All right? A lot of us would probably buy that. But retail is not. His main level right here is 19K. That's like kind of like where his sweet spot is. So, normally what he'll do is he'll drop it to this level. Test. He'll consolidate heavily at this level, but I think that this level will 100% be seen at 18,176. All right, but it'll only be seen for about 15 or 10 minutes. It'll wick down there. It'll happen so quick that you won't have the opportunity to buy. You won't really have the opportunity to buy it unless you set a buy order there. But the idea is that I don't want to sell large leverage here. So I got to do it quick. I can't give people the opportunity to go on big leverage there, right? In essence. And anything can happen. Anything can happen because he can, depending on the order book, because look, there's still this down there. Did I measure that? Yeah. All right. There's still the order book to consider, right? Because if he does send it down there and people do grab high leverage longs, right? Then he's got to fulfill that obligation to them. All right. So where's a Bybit or whatever? I mean, let's see what people are, if people have like large positions. I have these bubbles this guy gave me. I don't know. You know what? The bubbles are irrelevant because the bubbles are old. But yeah, that's in essence how the market is happening. He's making the market. He's moving price to where it needs to go to create the demand so that buyers and sellers can step back in, have their little battle. He'll move and manipulate price to where it needs to go to balance out his books, take a small float, and he just does the process all over again. However, you've had 3 cycles of up. Wouldn't it make sense to have one cycle never reach an all-time high and create doubt so that they can send price not as low as the first bear market, but make a higher low in the second bear market, and coming out of that, you'd have a new all-time high where you can create some kind of new narrative about Bitcoin, and that would be like 8 to 10 years from now, right? You can create some new narrative of Bitcoin having AI technology or They've changed the system or whatever. But it's only after they've accumulated enough supply to control everything. Because here's the hard part about Bitcoin. Is that you got Satoshi, all right, is this mysterious character. Whether this is true or not, this is what grabbed my attention. Is that he created Bitcoin out of the great financial crisis of 2008 when the government tried to print all this money, all right? And instead, what if Bitcoin is just a clock set in 2008 to let everybody who is in big money know when it's time for the next crash? What if that was the purpose? Okay? Where they can grab the most money, okay, that they can, buy the most at the lowest level, create false demand by pressing the pump button, okay? And then accumulate, all retail money that they can pocket later. All right? I like that. Now, oh man, I'm frozen. Hold up. All right? That's an option. All right? What you believe or whatever you believe. Here's the good news, though. Bitcoin has made them $2 trillion in 12 years. All right? That's what happened. That's a fact. The books show that with total market cap. All right? Total market cap has made them a ton of money. All right? And you can tell by the wicks. Look, it's okay to go long, right? See how the wicks on the yearly, it's like a signal. The wicks are like a signal. It's okay to long here, big money. See how this wick, this is do not go long. We are short. We are more short than we are long. We sold the most than we bought in this year. That's what that tells me. Okay? That's what that tells. The wicks tell me. Do you see the pins tell you everything? Do you see who they're trapping, right? They're trapping retail long. All right? Do you see how there's no pins on the bottom? The pins will flip, right, to the side. They are not trapped, right? When you see a big green pin on total, that is a great buying opportunity. All right? That is a great buying opportunity. Look at the green pins. Every time you get a green pin, it's usually a good buying opportunity. Right? Look, it works here on the weekly. Big red pin, little pin. Hold off, guys. Look, it's okay to go long anywhere in here. When do you want to go long? When the second green pin flips. See? Green pin to the up. It's okay to start buying, guys. But that's just the first signal. The second signal is when the week closes green, right? And notice how this is huge drop, okay? And then price stayed down here for how long? 1, 2, 3, 4, 5, 6, 7, 8. They had 8, 9, 10, 11, 12 weeks to buy back on the way up. 12 weeks to buy back in, all right? 12 weeks. Now, you might say, well, you have a green pin here that's large and a green pin here, and we all didn't know that the flu was going to happen, all right? What kind of candles are these? What would you say? What are those? Are those doji candles? Right? That's what they're called? Here's what a doji candle is. A doji candle, most people would say, is indecision in the market. No, that is not what a doji candle is. A doji candle is a time when the guy who moves and controls the price stops price in order to take your money. He holds price there so he can sell on you, notice, right? A little buy and a large sell, right? Sell to the buyers. I'm selling to you, right? To pump the price, right? I will buy a little bit and then I will sell my bag. See the volume, right? That's the volume. I drop price. Why does price drop? Because of the flu? Or was it a stop hunt to anybody who went long in this region who was going to get it right and make a big bag? And let me fear you out of the market so you will never catch a huge derivatives long and make bank with us. Nobody bought this wick. Nobody bought that. On the daily, it's crazy. They bought the wick. That's why it's green. Look at how much time did they give you to buy this wick? And look at the gap that they created that they can just fly straight through. Because all of you guys are going to call double bottom and try to catch the bottom, but it will just fly straight through there because there's a huge gap in the chart. If it stops anywhere, it'll stop here. Or it'll actually, no, I'm lying. It'll stop in between the wicks. All right? It'll stop in between the wicks if it wants to stop. But it won't stop because he's got money down here on the daily on total. Well, we don't know that, but you know, it'll stop in the green, right? Green, stop, slow it down, stop. Absolutely, gray is like, fuck it, let it go. That's what it is. All right? But look at the speed that was transacted here on total. Mad speed. Right? No one bought a red wick. Not even them. Someone did. There's where demand was. Look. Right? Demand. Slow it down with speed. Things are getting crazy. We don't want to ruin the crypto market. They had to buy here. Blue is like desperation buy. Right? Things are getting out of control. Right? Desperation or whatever. It's planned because it's done with a computer. Right? And then there you go. Buy here. Here's your next best buy. All right? The question is, you can tell a lot by the wicks. Where's the demand sitting according to the last wick on the daily? The demand is down according to the sentiment. Right? That's a downtrend on the daily according to those wicks. And you can say things have changed and all that other stuff, right? But really, I talk about people who wish, they got, I know how I feel. I wish that I got in during the flu, all right? And if they wanted to create demand there, all right, for Bitcoin, let's just make a stupid trend line. Why not? It's a trend. You can follow it. Let's go on Bitcoin and create a stupid trend line of where price can go, where the demand was, where the demand could be in the future, according to the daily wicks. Let's see if it has a wick there. Oh, it doesn't. Interesting. Oh, yeah, it does. No, it does. That's not good. Here's your demand line. Let's use array. You'd have to do like half the wick. I don't know. I've never done this before, but let's have some fun. There's your next demand zone. 2,466, 1,970. It goes right in there. That is the demand. The demand is down on the wick. All right. If the demand was up on the wicks, I would say it was bullish after, during that time. All right. But that's the past. So let's go to the future. Let's go to the future, right? Let's go here. Where is the demand now? Look, here's the demand here. The demand was up at the time. Green wicks are up. All the wicks are kind of up. That's fine. But that's not the same. Here's some interesting wicks to follow. You can follow those wicks. Let's do array from there. Because this is where it dropped first. This is like how they want to create demand, right? If I wanted to create demand, I could create it here and follow the trend. Too low. Too low. Too steep. But where would it be now? Because the wicks will tell you. The wicks will tell you. The bigger wicks will too. I'm playing now. I'm sorry if I'm boring you guys at this point. Look, here, the wicks. The closes, maybe. There it is. There it is. Alright. Demand, demand. You follow the demand. This is how low maybe it could go. And this is just for fun. Alright, stopping volume. Let's see if you got confluence. There you go. These are levels that can be tested. Alright. 16, which was tested, so we come to our next level at 10.5, which will be tested. 7K will be tested, and if 7K is not a buy zone, you got these other levels where red is an absolute buy, I think, for them. Okay? I think red is an absolute buy. But that's the trend right there. That is the trend. The trend is down. Right? Look at the wicks. The trend is down since the peak of the bull market. This was the peak. If you look at the volume, that is the peak. Look at all the selling they did. They were able to sell all that, right? And then they just been accumulating. Look at the green on the 5-day. This is just accumulation, right? And then they distribute, like get you to buy, accumulate again, right? Sell to move the price, right? Look at the sell. Sell to move the price for whatever reason. Never really goes anywhere. They sold to you there. Sell, buy, slow it down. It's just whatever, man. I don't know what you guys think, but that's the way I'm reading the chart, at least, right? And level 2 has they're testing level 2 buy areas. That's all this is, of where they made their money last. They made their money here, here, here. That's how things are going, in my opinion. Now the problem, like I said, I was talking about the crazy theories, is the clock, right? Imagine Bitcoin was a clock that just, is going to tell the whales, when the next market crash is coming. All right, cool. What do you look at? The DXY, right? What did we print a lot of? Dollars, okay? The dollar has been devalued. It needs to become more valuable again, all right? So, like I said, look at this chart. The dollar has only gone up since Bitcoin was created. That's the truth. That is the truth. They say that Bitcoin is good. The dollar's value has only gone up since Bitcoin was created. They'll tell you that's not true. Okay? But the truth, that is the truth. So now they've grabbed all the money from the Bitcoin. Okay? They've grabbed it all. Now, they will send Bitcoin low, where we will buy dollars high, but they will be buying Bitcoin here and here. Now I know Savvy has his look. Savvy's a very, very, very good TA person, in my opinion. All right, I know he gets a lot of flack on social media and stuff like that. But what I've learned is that everyone is right and everyone is wrong, because no one knows what the hell is going to happen. I mean, that's the truth, right? Savvy's prediction is like 175. I don't think it'll get that high. I think that's too high. Just based on this, based on the percent increases of the levels. Because that's where I know they work things out. They can't devalue all the other currencies in the world unless they want to. They could do whatever the F they want, right? But they've been moving it up for these. The past has said it's increased 30% in this level, about 30% in this level here. And now they're working on another 30% markup in the dollar, I mean, that's the rate at it's been increasing at the levels in which they buy and sell and move the money at. So, have we seen the top? No, probably not on the dollar. Because, again, things change. Depending on how valuable they need the dollar to be, it can go as high as however the hell they need it to be, right? But the rate of change on the dollar, according to them in these past years, but every level is a different cycle, right? Here's a different era, here's a different era, and now we have this era. I mean, granted, they probably know what the hell is going to happen, but there needs to be distribution, okay, up here. So when you see them distributing, right, and that could take a very long time, when you see them distributing, then you know it's time to when they're distributing their dollars to go back into assets and it gets all crazy, like really volatile, then the stock market will be at its lows. And you won't want to buy that. But they're distributing their dollars. What they're doing is creating a panic, a tizzy. All right? So you got your Dow Jones that... is this loud? All right, whatever. Whoa. It's been in a 100-year bull market. Let's just say that. Oh, that's why. It's been up only for 100 years. What do they tell you to do? Buy low, sell high. Cool. Buy low, sell high. All right. The last consolidation period for the Dow Jones was here. Here's where it consolidated. And they can consolidate the Dow Jones as much as they want, right? So you've had a nice consolidation period here in the 2000s, right? 2000s, it's 20 years. So here's your baby boomer. The baby boomers, right? Because they're like the highest population. The baby boomers are about my age here. All right? Large population, right? Who accumulated assets in that time. There's a large accumulation of a large population, all right, who are about to retire and want to sell off their assets, right? The boomers at my school, what I'm not going to name names, but, it's DCA and all this stuff, and they've been in an up-only market, right? They were DCAing and all this stuff, and they had a good buying opportunity in 2008. Cool. If they were in the market and they got that opportunity, great, and they've made bank. Now it's time for them to retire. Cool. That's basically how I view it, right? Now it's time for them to retire, right? How many years does it take? The Dow Jones, here you go. It went sideways here and lets a generation accumulate. 65, it accumulated for 20 years. All right, let's pump it. There you go. Right? Something like that. You pump it where they can the next generation can sell. Okay? And then they pump it and the next generation will sell. Okay? That's how the Dow Jones works. It goes sideways to allow us opportunity to accumulate for its next move up. One way that you can see that beautiful market cipher that no one wants to talk about, bearish divergence on market cipher is extremely strong. All right? This is the 12-month. Lower highs. You guys probably use market cipher or whatever. Lower highs, massive higher lows. When correct? When is it going to play out? Are you saying it played out already? You might say that this is a buy, right? They buy the green wicks. But how many green wicks did you get down here? 1, 2, 3. 3 years. Up, correct. And then go. Right? This is a stop hunt. Because maybe something bad is going to happen. Right? This is sell. Sell now. This is sell now. To me, this wick on the Dow Jones is saying, get the F out. Get the F out now. Don't worry. time passes, right? And now this is sell now. This is the warning. This is it's okay to sell. Right? Look at the wicks. Look at the wicks. It's still okay to buy. It's still okay to buy. Right? It's okay to buy the 5. It's totally okay to buy. All right? Cool, man. Thanks, Nate. All right? So, right now, the Dow is just sitting on the catch-up on the 12-month time frame. But the trend is still up, but it is bending on a yearly basis. And here's the proper way to read this, by the way, is how you can tell. Here's how you explain divergence properly. All right? This is the strength in 1999. These guys are averaging lower closes each year. But the prices are being pumped. All right? That's how you read the indicator the correct way. That they're averaging lower closes, meaning they are selling at lower prices, knowing that there's more pain to come. So I'll sell here, I'll sell here, I'll sell here. What is that? 07, 21. The last time it was strong was in 1999. That was the last sign of strength. All right? So, 1999. Right here. The last consolidation zone. Where they've tested demand many times, and it's come up. They're pinning the mustard. But, you got to follow the money. The 50 EMA is always and forever will be the flow of money and where the money is. The 50 EMA on the Dow Jones, or 55, is coming up into the previous 2 tests. And you don't know where this will be a year from now. But more than likely, if you want to draw it out, you can kind of just guess based on the trend. Right? If it does go that way. Right? So somewhere there's 2025, 2026, 2027, Because you've had 3 hits to the low. 3 levels have been tested. All right? And there is demand on the Dow Jones here, here, and here. But big money, right, when they are selling off, probably come back to the last 2 tests, somewhere in between the wicks. That's where they buy, in between the last 2 wicks. All right? That could be wrong, by the way. And there could be like a Great Depression coming in, we're all screwed. But I don't think that's going to happen. I really don't. I don't know why. I don't think that's going to happen. I'm not extreme like Savvy. All right, he can be a little extreme. However, he could be fucking right. I'm not going to say either way. Either way, I don't know. But the flu, that wick, needs to be tested. This wick needs to be tested. There's a lot of demand here. All right. But they've increased supply of the dollar. How do you balance that out? Right? You need to increase the demand for the dollar. How do you do that? Correct the market. Now, I don't know how many dollars were printed. I don't know. Does anyone know? What's the whatever they increase the supply of the dollar, right? Take that ratio and then apply that to the Dow. If they increase the demand of the supply by three times the amount, I think that was the number. Here's your 3 times. 1, 2, 3. There's your 3 demand zones. Okay? So they could come back down into here and really F everybody up. All right? If they needed to. What's the news? What's going on here? Bulls leap to more than 1-year high. Oh, no one cares. All right? What did the wicks tell you? Everything. The demand is down. This is a red candle, right? But the demand is down. Since the crisis, the money supply has grown by 40% in the US. All right, cool. 40%. All right. So a 40% correction on the Dow. There you go. Correct. Corrected 40 to 50, that's the idea. But remember, you got to create more demand than supply, right? So if the supply increased by 40, to balance that, you need to create something very similar, right? Well, there might be a new wick coming down in here. You won't know, but that's in essence how that works, right? Something in there. They love to buy between the wicks. That's what I know. They love to buy between the wicks. The Dow, S-Coin. All right, look at the yields. How long is this going to take? 10-year. That's when people are willing to get in. 2-year, 1 year. I don't look at the 5-year. I think the 5-year might be good to look at. But yeah, that's in essence, that's how it works. Just keeping it simple, What's going on with Bitcoin now? You guys want to look? Because this thing's going nuts. Any altcoins you want to look at for fun while I'm here? Oh, here's something fun. Link. What is Link? All right, what does it do? Right? Link collects data. Okay? To me, and in our group, Jordan's group, Link is just a buy and sell signal for the whales. If you ever notice when Link pumps, when it's done pumping, Bitcoin dumps. Everyone ever notice that? What does Link do? It collects data from all of the cryptos, right? And gives you a nice gauge of the market, all right? So this is an oscillator. This is a bear market oscillator. What did Link do yesterday? Link, actually, on the daily, is saying it's okay to buy at the moment. That's the signal on the daily. I don't know if I... Look, to me, this is a buy sign. Look, demand is high. Demand is high. Go. That's a go. That's the go sign after it comes down. Maybe. If I'm reading my own indicator the right way. Because demand is also flowing here. The wicks tell me... Actually, you know what? The demand... Maybe I'm reading the indicator the wrong way. Maybe the demand is down. This is saying demand is going down. Look at the wicks. They're all pointing down. The Mayo is pointing down. I don't know if you guys agree with that or not. Let me know what you guys think. I hope that you guys are enjoying what's going on here. I wanted to talk with some people about everything that I'm learned. I've lost a ton of money doing this crap, trying to make $1 out of 15 cents, and it never works out. Really, the only thing that you guys should be doing is accumulating dollars and learning how to read the charts so that you know when the absolute best buy prices are for whatever their secret targets are. That's in essence how I'm reading it. But look, I'm into day trading. I am into it. I was getting pretty good at it until I fucked up yesterday because they fucking manipulated the market on me and I got caught up in the wrong thing. Because yesterday was a retail trading day. That's what it was. And I'm not trying to trade with retail. I'm trying to trade with them. Because they make money every day, where retail does not. That's in essence. So, what's going on with Bitcoins here? We're creating stopping volume. That's what we're doing on the 15-minute. We are creating stopping volume. Why would they create stopping volume? Because they are coming for the stops of anybody who got it right here. All right? So, I don't know how many of you are still with me, but like I told you, the money is in the wicks. Think of it like money transfer, right? So here you go. New York bought here, right? And Sydney sold the money. Asia buys. London buys. Well, actually, this is a sell. And then New York sold the most up here. All right? So we got a nice sell a nice short they built here, and a nice short they built here. All right? And they're going to come back in between the wicks somewhere. Right? It's likely that this is them going short. This is them giving you the opportunity to go short. If you had the opportunity to go short from here and you're a retail trader, where are you going to put your stops? Just above previous high. They're never going to give you this consolidation, but they might give you this. They might give you this. There's stops up here. That's their target. All right? They don't need to reach that, because if people pay themselves, okay, then they no longer, need to do that. All right? They no longer need to do that. That's why we have to watch and see the flow. All right? But you don't counter trade and trade this. You wait for the sell signal. The sell signal on the 15-minute on mine is a big green wick. You get a big green wick to the upside, you bet. Well, look at these wicks up here. Look it. This is a signal, right? We're about to go short, don't long. We're about to go short, don't long. Okay, it's okay to go short. This is the confirmation. All right? So when you see something like that, where you get a red wick and a green wick, right? This is like it's okay to go long, but for a very little amount of time. All right, now it's better to go short, right? The wicks are hard to read, but in essence, what do we got? This is money flow. Wicks are the money flow. All right, so here's your trend that is currently down. So how low can we go here from the last time they were moving money around? Let's use a ray, because we know that there's money down below. There's probably a lot more shorts than there are, a lot more longs than there are shorts to catch. There's the trend. All right, that's what you got. The trend is very much down. The trend is very much down, but they got to come capture a little bit of money that's up here, and they're stopping volume here to stop everybody out. This is the volume they created for the stops in this region right here. All right, that's in essence what's going on here. But you could probably follow this trend line all the way down. All right, but you want to get in where they get in, right? So, but they're never going to give you, see, there's no trend line on the top, okay? They're never going to give you that, all right? The trend on the top is hard to catch. See, this is called the 33 trade. You see the trend on the top? The tops were very easy to catch here if you were shorting, all right? The tops are very easy to catch. The tops are not going to be easy to catch over here. All right? They'll make the bottoms easy to catch and never let anybody book a profit on a long. All right? However, you can see the signals that they send out to each other on the hourly. Look, big green candle. That is a sell signal. So on the next hourly candle, if you think that the trend is currently down, the next big hourly candle that closes like that on a hammer, right? Going, out of New York or whatever, or whenever they send it to you, then that's the short. It all depends on the wicks. Subscribed, all right, nice. All right, I mean, I'm not gonna. I'm the most unprofitable trader on YouTube. I've never been profitable. Oh, but look at this. What's going on here? Are we absorbing? No, it's gray. All right, but look, how many hits to the low? How many buys have we made? The way down, but he could buy a lot more. Look at all the buying he's done on the hourly. He's bought a lot of supply, right? But that's only to bring it back up, to bring it back down. This blue, if you wanted a FOMO short, you could probably FOMO short at a break of 21.5. If you wanted to get in on the action, if you wanted a FOMO short. But really, I would wait somewhere in this region. You know, they work between the wicks. Their last sell. So, let me see. Where are people's stops? This is where people's stops are. Left. Alright. People's stops are up in this region up here. 22.5. You know, that region. Stopping volume was created to stop out anybody who got it right. Here's the volume they created that they can use over here. YouTube is receiving video to maintain. Alright. This is created for anybody who got it right in New York. Alright. Mainly they tend to come up to the red or the orange, really. Right? Because people will put their stops at last week's low if they got it right. Right? The golden pocket, 22,570. Alright? Thank you. I am not profitable. I am absolutely not profitable. I am absolutely not a profitable trader. But if you want to listen to somebody, I think it's good to listen to somebody who is not profitable, because they know what the fuck they're doing wrong. I can't tell you what to do right. No one can, but I can tell you what the fuck I do wrong. And what I'm doing wrong is trying to fucking guess what the fuck it's going to do. I use too much leverage. That's my biggest thing. I use too much fucking leverage. Yesterday, I had the fucking move down. I had it down. And because I saw what the fuck they were doing, and I got too excited, and I got fucking liquidated. Yeah. Actually, because, look, here's what happened with me. Is I knew that they were going to dump the price, but I was waiting for them to come stop out here. That's why I changed my candle colors. I changed them last night. I fucked with them because I had my candle colors wrong. I got my signals wrong. I thought they were coming up into this region to stop out Asia, because this was too easy of a downtrend, and they never came back up for these stops. I didn't realize that the signal had already come in. And then when New York came up, I was like, all right, that's a long trap. They're trapping the longs. And I was waiting for them to trap the shorts. And I was waiting for this move. I was waiting for this fucking move. Where was it? Here. I was waiting for this. I was waiting for the W. I was like, all right, here comes my W formation. Here it comes. And then I was like in here on a long, which I knew not to counter trend trade the fucking coming out of level 2. And I said, I'll make money going up there, and then I'll make money coming down here, right? I'll make money from my short up here, and then when they come down, I'll make the money down there. I said, all right, let me trade that. And I longed from here, thinking that I was going to get the stop hunt at the end in the New York session, okay? And instead, New York just fucking dropped it. They just dropped it. I should have known that if I said in New York my signal was pointing down. This is the sell signal for New York. I will drop price. Go short in my next whatever. Look for shorts in my session. Right? This is not the session. That was the right? And then my next session, right? He came up. That was this is the go short when I go long. Right? Go short when I go long. All right? You didn't get the go signal from New York. New York gave the go signal here, saying they were going to short in their session. All right? And then in their previous session, they didn't give that signal. They said the short is still on, but not yet. All right? And here, Asia collected money, right, for the short. They brought it up. They brought it through London and gave it, right? They collected money for their short in Asia, right? here's the money for the short. Let's give it to New York. New York goes, let's go, guys. Bang. That's what the fuck happened. So any green candle on the hourly that has a long wick on it, you want to short that shit on the next one. You're not going to get one for a while. Let's go back in time and see how that works out. Right? But this is the wrong side. The opposite behavior will be seen on the other side of the BART. All right? Because you didn't want to short. You could have shorted that and made a little bit. Right? But don't forget, a BART pattern is just fear and greed. Right? You got greed on the left and fear on the right. That's really... But market makers work opposite. So look, anytime you get a large hourly hammer, it's usually good for a downtrend. All right, look at your hammers. Downtrend, downtrend, downtrend. 1, 2, 3 hits to the high, rip to the downside. Right? And now you're in a bear market. Now I got my candles set for bear market candles, right? You got 2 hits on your hourly. This is not a sell signal. It could have been perceived as that, but then he changed the trend. See, they can change the trend at any given time. So you got to be careful. You got to be careful because they can change the trend at any given time. But in my opinion, this is your level 1 consolidation. All right, level 1. All right, the levels will be seen on the opposite side. Here's your level 2, where you got 2 wicks. Okay, and here's level 3, where they want to dupe everybody. Right? 1, 2, 3 hits to the high, and the last high is not larger than the last one. All right? Here's level 3. All right? What they've done is they've broke below level 3. They've even broke below level 2, right? But they'll bring it back up just to hit the stops between the levels here. They're really not going much higher than where they previously sold from and bring it back down into level 1. So where do you look for a short is the question, I guess. You look for it in the stopping volume. I like the 12-hour, the 22-hour is banging for stopping volume, in my opinion. Where did they build the stops? Money for the stops. Ooh, this is selling at speed. Here's your stopping volume. Right, that's where they built it. Let's go to the 12-hour, though, to see where we can stop out people. Where would I need to build stops? Here, right here. You're building stopping volume here. So if I'm building stopping volume for level 1 and level 2 shorts, who got it right? I can come as high as 23,128. Sometimes the hardest recommendation to trade is yeah, man. Agreed. So I can stop people out who don't let their 100Xs go. But normally they do at one point. 23K. But you want to look anywhere between, 23K, 22.9, and then, this region all in here. 22.8, 22.6. Because what'll happen is that as price comes up, the shorts will let go of their positions. They're gonna start letting them go. There'll be some kind of climactic behavior to make you believe that Bitcoin is gonna go up, and then they go short from the highest point, probably at 23,007, right? Right over that number where it gets you to go, oh, we're actually going up, and that's when they will go short. They might throw a wick above, but I think 23K is a great short. Here's an easier way to do that, by the way. Right? Rather than draw fibs and get all psychological on it, is just go to your 6-month 5 EMA. And that's where price can come to next. 6-month 5 EMA. Wow. See, they gotta build enough money to push this back. To push back the catch up is a lot. It takes a lot of work because time is more valuable than money. All right. To push this back is gonna take a lot. 22,600. Right? That's gonna be a tough cookie to crack. Look on your 12-month. Your catch up is just laying on you. This is major resistance. The catch up is just sitting on you. It takes money to move the market when time is moving against you. And to me, Bitcoin is time. It's a clock. Right? It's a clock against whatever it is, whatever plan they got. All right? So you got your catch up sitting on you on your 12-month, just weighing you down. But the only way to combat that time is to create money, which can push and move things faster, which is how we can speed things up. But what are you not going to get? You're not going to get 23.6. You're not going to get that. That's where they pinned the true 200 EMA, right? 2 times pin, drop. You might get it if it moves down. That'll happen with time. But if you see another pin to this, 3 pins solidifies the level. At 3 pins, it's done. It's already been pinned twice. 1, 2, 3. They've pinned it many, many times. I don't think you're going to get that short. I don't think you're going to get that. The only way to create enough energy is to move things up at such a rapid pace that you get your golden cross. Because that will actually fire off an EMA buy signal where people will be inclined to buy. But as long as these are flat, nothing is going to happen. If you see those cross, you look for another short up top. All right? If you want to find a great short, the best short that you're going to get is 27,500 to 25,300. All right? That's where your mustard is. All right? That is, in essence, where your best short is going to come, somewhere in this region. Because they can come back and make a profit on any of these, on whatever they didn't take from here. But I think they took a lot, man. I think they took a lot. The trend is down on their monthly. They pinned the monthly 50 EMA only one time. They've only pinned it once. All right? But look, the 55 EMA on the monthly, they've pinned twice and is currently being pinned on the monthly. So it's very likely that demand on the month has been tested here, been tested here, been tested here. Demand has been tested. Okay? This is us testing demand on your next month, right? Your next monthly wick up. Just watch that. Watch the closes. Right? Where's demand next on your monthly? 21.3. Might want to be tested. Maybe you test the closes. 25. All levels will be tested. In essence, we won't know. But I would just trade light. Watch the flow of money. Watch for wicks, right? And don't counter trend trade the true trend, which is the market maker trend, which is the trend they are creating to see where the demand is. And right now, they are in a markdown phase, right? If you want to catch a long, you catch a long below the last demand zone that they tried to create, right? This was the last demand zone. You don't go long from here because this zone was tested already. This is going to fall straight through. It's going to fall straight through. And then, 13.6. Maybe you can catch a long from there to come back and test. But really, I think it's just a slow and steady pace. Here, watch this. This is great. I didn't show you guys this. I don't know if some of you guys are still watching. I drew this out. Some guy in Market Cypher freaking laughed at me. I was so pissed off. I drew this out so long ago because CryptoFace is always drawing spider lines. And I thought, interesting. He draws spider lines from the previous bear market to judge where things will go, but he never draws it from the prior bear market, from level 1. Why not draw it from level 1? What if the level 1 levels need to be tested? And a lot of the levels have gone pretty well. You know, this yellow line from, the trend held pretty nice. There was a nice pin there. You got support there. When we fell through it, I thought, man, how low can we go? And then we hit my blue line, and I was like, whoa, that's pretty dope. But we got rejected here. All right. Now, could you come a little bit higher? I don't think you're gonna. But if you did with time, yeah, there you go, 25.5, right? If you wanted to. These are just demand zones. What's the highest it could possibly go? I mean, with trends up with time. If you're thinking like that. But to me, the trend is down, so I would just look lower. And look at how many things can be tested. You can test all these lines and figure out where the demand is, and test things slowly and steadily on a nice slow and steady drop. When you're in the wrong side of the trade, it feels like forever, right? So when you're in a long and you're not making profit, they're never going to let you make profit. You want a banging FOMO short, is you short here, man. They're going to drop. They could still test here, but man, 20,000, FOMO short where they sold from last. This would be my FOMO short line. Look, test, 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 test. This line has been tested, and when it comes back down to test again at about 19.5, it's just going to fall through like it did before. Like it cut through like it did before. It's just going to fall straight through. It'll bounce. It'll bounce. It'll bounce. It'll bounce. It'll bounce. But it's been tested so many times. It's just going to bounce, 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 fall. And then it'll catch itself down here. Bounce, 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 fall. Bounce, 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 fall. It's like a cascade until actual demand is found. This thing is heading straight down, in my opinion. Straight down weekly. Bang, 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 bang. And then they'll test the true level here. Where do you get that? I got that from here and here. This is where true demand was found. And that sits at about 7,500, in here, right? And depending on what the market does, they can trend that up, and then they can test up here again, right? Test the sentiment, and then it can drop us all back down to here, to the red line, and find out where the market goes, Finally only coming down to about 3K. The last actual line from level 1 that I could find on a spider line. So, right, here's level 2 support. If that line holds, that's fine. To me, you're looking at 5,000. No, I've never drawn spider lines from the top. I don't know how because I only know how to draw them from the pivot points, right? So I need to find a pivot. I know he draws it from the closes and then the pivot, and he goes up. So how would I do that? I would draw, this would be the pivot here, I guess, right? So I would pivot it out like that. That's the last pivot point. Or is this the pivot point? The true top. Pivoting here and drawing on these. On these levels. Oh. Okay, I kind of see what you're saying. Pivot to the close. Is that how that would work? Let me know if I'm doing it right. So here's your all-time high, right? To your last demand zone. To the wick or the close? Close, maybe? It's the opposite. There you go. I see what you're doing. But you could also slow the trend down on the third level that you created. Let's see. What would I do? From the last close? Like something like that? Let me know if I'm doing it right. So something like that. I feel like it's harder to draw spider lines from the top. But this is testing sentiment, because that wasn't them, right? Is that how that works? Let me know. I don't know. Spider lines from a peak, maybe? That's interesting right there. Might give you a general rule of time, right? Of that it would take 2023. See, time, I don't know what's going to happen next. We all don't know. How long they're going to hold the bear market for. They could speed things up with a financial crisis. Financial crises are great for resets. I just randomly started to play around with them, and they line up or give you good cross points. Word. They totally give great cross points. I totally agree. This chart has served me very, very well for, consolidation zones. And basically it's just, buy levels. But in essence, I really do feel that they're going to speed things up with a black swan event, with some bull nonsense. And that's going to be the time we buy, or it's just going to be slow and painful, a soft landing. It's not really soft. Look, soft to me is crash the market and get it over with. That to me is ripping off a band-aid is soft. But the boomers need time to sell their assets, and there's a lot of them and all that stuff. So it's not a soft landing. It is the most painful thing I've ever gone through. But that's what it means to us, as I'm a 37-year-old person, is that it's time to make dollars. I'm trying to figure out how to day trade to make dollars because I'm a teacher and I make no money and I got kids. I took the day off of work because I'm so stressed out that I'm trying to learn all this stuff. And I wanted to share with somebody because I'm telling people that the markets are going to go down and all this stuff. Oh, you're a conspiracy theorist and all this stuff. And I go, but look, for 2 years, all I've done is study people do charts. I've watched the retail way. I've watched, the market maker way. I've watched everything about divergence. So, and all those things. And, and all I've learned is that the trends are true until the shadow people push the button and they change the trend. And at any given time, they push that button. So you're never going to know. You're never going to know. All you can do is watch and wait and hope that you get a capitulation. Because slow and steady like this is very painful. It's so painful. I'm dying. But the current trend is, if you're going to trade the trend is down. The trend is down, for no doubt. And EMAs on Bitcoin, which are, to me, very, 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 very valuable. All right. This is actually interesting, right? This is your retail line, right? Your watermark has not crossed your Fibonacci, 200 moving average. When that crosses, I know we're still in a downtrend on the daily, right? Or actually, yeah, you haven't crossed yet. You haven't got a true death cross on your Fibonacci EMAs, at least, if you want to judge it that way. All right, so there's still time. There's still time on the weekly to change the trend. All right, you still have this W formation to bank on. All right, but what's the news saying? I don't know. I've kind of stopped watching it, but there's something with crypto staking and Kraken and them wanting to ban it. Look, bad news in a bear market is actually bad news. And good news is just a false narrative for them to get to sell on you higher. So, are they perpetuating bad news because they're ready to come down and test the lower levels? Very likely. Very likely. Is something brewing in the stock market? Inflation. CPI comes out next month. Watch that, right? What's the news right now? The news right now is that CPI, The news right now is that CPI and inflation is good, right? It's good. I was showing my students TradingView, and they go, you can track anything. And the kid goes, bananas! Look at bananas! I go, I don't look at bananas. Right, where the fuck is bananas? You look at bananas last month, up 18%. Bananas was up 18%, right? Or was that bananas or eggs? Eggs were up 18% last month. Bananas up 5%. What cooling of inflation are they fucking talking about? It's up. What's oil doing? Oil up on the monthly. Come on, TradingView. Oil. What kind of wicks have we got here on oil on the monthly? It's okay to sell. It's indecision to me. There's a lot of wicks to the downside, but the wicks to the downside is oil is a buy. This is oil is a sell. Right? Buy, sell, buy, sell. All right. What are the wicks telling me? The wicks will tell you who they're trapping. They're trapping longs on oil. I'm sorry, they're trapping shorts because oil is going to go up. Look. They're trapping shorts. Yeah, they're trapping shorts. In the past 3 months, they've trapped shorts on oil. Oil's going to go up. 1, 2, 3 hits to your watermark. Money is flowing into oil at the moment. This monthly close will be interesting. What do you got here? You got a W forming on the Mayo? Is that a nice W? Could be. That's a W formation. Come back, test the money, move higher. And you can test higher levels. Or you'll just consolidate and just test. All right? You know? That's how it'll go. All right? So oil, up. All right? Up. Now this thing could M out and fall down because you don't effing know. All right? So you look at your VIX. The VIX... Where are you? There you are. The VIX is scary as shit. The VIX has been consolidating in here. And if it busts out, man, you're screwed. Look at the wicks. Buy. This is a sell. That's a nice pin on the weekly. Look at how the pins don't occur on the VIX until it's actually time to sell. Right? Now it's time to sell. Sell. Go. Buy. Go. Until it gets so much time and pressure that it's going to bust out of here one way or the other. And it's either going to come into a new bull market or go into capitulation. When would that happen? Sometime towards the middle to the end of this year. Right? Dow Jones, bearish divergence, confirms, confirmed last year. Probably will happen sometime in the middle to the end of this year. Time will run out. Time is only on their side for so long. Time is only on their side for so long. All right? Interest rates. So look, there you go. Though there's the narrative, right? Interest rates. They will raise them. We're done raising. All retail buy. Bang. That's when they send it down. And that's when we buy. If we have any fucking money. I just got a raise at work, so that's good. They gave us money. What we do with it, because we're government workers. So they did take care of us, being a teacher and stuff like that. But yeah, I wouldn't be buying anything at the moment. I know that something like GRT is very interesting, right? But what are you getting on your weekly? Are you getting a buy signal? This is a sell signal. This is... We're still a buy here. Yeah, GRT, there's money in this wick. That's what this wick tells me. There's money up here. But this wick tells me that there was no money at that level. This wick tells me that there's money at this level, and their money might be at this level right here. There might be money here. So GRT between the wicks, at this level right here, maybe 37 cents. What's it at now? 16. The money is in the wicks. So maybe in the short term, GRT is a good play. You don't know what the hell's going to happen next. You know, short term. Hold it for a month if you got the money to be in a loss. But anything can change at any given point. Mina's pumping. No good wicks on the weekly. Go to the daily. Sell signals being issued on the daily. That's not good. But anything can change. You're holding the Mayo. It's cool. You know? I don't know. Anyway. Thank you for those hanging out with me and all that stuff. I don't know, you know, if you guys are part of Jordan's group or whatever. But that's my general take on it. Let's look at Algo real quick. Because Algo is something that I think is actually pretty cool. Look, I like this blue vector candle at the high. I know that's selling at speed, but, you know, I think Algo is an interesting project. Just because of how prices moved on it. Because look at they tested major demand and they're moving slow with it. I like slow movement. I like that slow movement. You know? If this is a nice consolidation. You know? And on the weekly, that last weekly wick, how it ever closes, even if it closes like that, look, you got two buy signals. You know, people will look at that as you know, long wicks to the upside, that the pressure is down. But I look at that as those are two strong buy signals, right? That means there's demand up there, right? Algo looks sexy. Look at all the demand for Algo. This is a lot of demand, right? Here, look, you see how the wicks change, right? You know, we want to sell. There's more demand than there is for sell, right? There's still more demand. There's still more demand up here. That's good. I like that. What's up with Shib? Nothing. There ain't no demand for Shib. What about Doji? Actually, Doge. Look at you got the buy signal on Doge. The demand is higher than. So there's demand up in right, but there's a lot of resistance here. That's how I read it. So, you know, Doge actually doesn't look terrible at the moment. You know, you're still underneath the money. You're still underneath the money. And they still hate all these people that went long on Doge down here. They don't all I know is they don't want to give you Doge again. Level 1, this level has been tested for a very long time. They're buying Doge. Buying Doge. What about the wicks on the top side? You got to look at those too. Look, buy, sell, buy, sell, buy. Look, I like this. Buy. They didn't sell you a lot, right? There's still demand. I'll sell you some, knowing I have some demand up here. It's tough. In my opinion, at least Doge comes back and takes the demand. It tests demand up here. To me, Doge, if you want to come take that wick and test the levels of the wick. Did I do that right? Come back here. Here's your buy sell zones for Doji, knowing that there's demand in the wick. And then I'm gonna get out of here. I gotta get off these charts, man. Really do. What do we got? Doge. $0.14. You want to go in between. 50%. 13.8. There you go. You want to get out, be safe, and not test things? 12.7. What's it at now? 8? Cool. Doge. But where are they buying it? They're buying it here. You know, here's your buy zone for Doge in the wicks. Here. If you really think Doge is gonna hold, all right, and in here. Right? They'll tell you this is you know, resist or support, right? But really the support is in between the wicks. Right there. You got great support at 5 cents. All right? And you got, if you really think it's going to hold, you know, 6 7 cents. 7 cents right down in here, right? Maybe you can W out, maybe a little inverse head and shoulders on the wicks here. All right, whatever you want to call it, inverse head and shoulders. I'll just use my W. All right, I'm getting tired though, but yeah, there's a little. Your W would need to flip to your top side though, so you can W out on your weekly if you wanted to, if they want. It doesn't seem like it. Here's your next W. All right. You need to see a wick higher than this wick for it to reverse. If you can come as low as that, and then shift out and test higher levels, right? On the weekly though, you want to see a move. He'll look at how they created the gap though. I like that gap for him to shift out into the next level from. That's telling. That's very telling. He created a gap here. He sold off quickly. I like that. Doge doesn't look terrible. Where you can come back and test some previous levels. And then you'll test the actual money that wants to buy Doge. But I would get out here. I would buy the next level of support, you know, probably just around the previous wick here. That would be where the next wick lands. 7 cents. There you go. Buy at 7, sell at 12. Buy at 7, sell at 12. That's not bad. I'm frozen. Anyway, I'm out of here, y'all. Thank you for hanging out with me. I'll see you guys in Jordan's stream later if you're going there. And yeah, we'll talk more. Next time I go live, I'll put it up. Peace out, everybody.